Hello, everybody. Welcome to the show. This is Trading with Livevol. My name is Stephen Choi, and and basically this is where I trade my Reg T account using LVX. So it was a pretty exciting day today, and basically we can attribute that to Janet Yellen and the Fed. Basically. I always wonder if the Fed will be on the side of the market, and time and time again, they prove that they want the equity markets to go up. You know, it seems like, I don't know how many times I have to see it, but it's like, you know, to bet against them, or to think that they're gonna do anything that's gonna prevent the market from going up. Just seems like not true, right? So anyway, we had a huge change in SPX. So let me show you the day trading. So basically, we were drifting lower and lower and lower, and then the announcement came that they're going to take out the word patience, which everyone was assuming was the trigger to the Fed raising interest rates in a couple of months. And basically what Janet did was take the word out, but then said, hey, we're gonna just look at the data, and I'm not gonna give you any metrics, so you guys will know when I'm raising rates. So essentially, basically she can raise interest rates 2 months from now, or not for the rest of the year. To me, my general sense is that this is laying down the groundwork for not to raise interest rates for the rest of the year. I think in my previous show, I was saying that whether they do decide to raise interest rate or not, that the market was going to go up. I didn't anticipate that not only will they not raise interest rates, but have such a dovish outlook. Essentially what the Fed is saying is that the growth rate in the United States is not as good as it was previously, so they will have to look at more data to make their decisions. So it was pretty exciting. Let's look at the SPX. Basically, we had this huge run today. One thing about the VIX was actually kind of weak the whole day. It's not a total fair indication because the VIX expired today, the front month VIX, so they were using the next month, but the next month VIX had the VIX futures trading a lot lower, and this is probably maybe why. So this looks like, if I just have to take a quick look, looks bullish for the market, and looks like the VIX is going to go down more. So I have a ton of stocks, but essentially there's a couple that that's more important than others. So one is the dollar. So I was telling you guys how I am bullish the dollar in the long run. So I bought these calls and I keep adding to it, and I'm still bullish on the dollar. So I have these January calls, which took this, you know, obviously with the dollar taking a beating, I lost quite a bit here, but I was buying the short-term puts in UUP. So if you guys saw my videos before, I actually had UUP calls and I was short a couple of hundred shares, but instead I was replacing them. So I bought the stock back, and basically I bought these puts. Now, I know last time I saw you guys, I had much less puts. So I've been buying them. I bought some more today. Let me actually show you guys what I bought in UUP. So in UUP, basically I was buying these for a dime this morning, and then 12 cents. And then, right, so 10, 10, 12, 12, 12. And then I bought 10 for 21 cents after the announcement. And then I bought a bunch of the 25.5 puts for 6 cents. Now, you guys might ask why I did that. It was because I thought it was a pretty dramatic move. So if you look at over the course of the past couple of years, this is a week's move, but essentially this drop happened just today. So imagine this as a one-day drop, and these are all weeklies, right? So this is pretty huge. Just looking at this, it doesn't look like it's gonna do this and then bounce right back, right? Essentially, it almost seems like, you know, they always talk about this crowded trade of people being bullish the dollar, and I think what happened is some of that covering had to happen today. So like as people are covering, more and more people are forced to cover, and so on and so on, right? So basically tomorrow, I don't think it's going to come back because there'll be probably stragglers who did not sell. So I think it's going to go down. I just don't know how much more, right? I'm kind of hoping it goes down to this 25 level because I have all these puts. But essentially, at some point, I'm going to sell all these puts, and then I'm going to buy more of the calls, right? So because I did this, let's see if I can actually see what I did. So because I did this, I ended up making $172 instead of losing. So if I just had my position, I would have lost, but now I made. And a lot of that was because I saw this order flow come in April. So I think this is kind of the stuff where the software is massively valuable, right? So here I was talking about UUP, and I was saying it was going up. And, you know, I was thinking like, hey, it's kind of toppy. I own all these calls. So I'm going to sell 200 shares. So if it does go down, I can make some money back, right? So I was thinking that. And then these guys started loading up on these puts, right? Essentially got me rethinking, right? Trying to figure out why they were buying these puts. Realized that most likely they were buying these puts just in case the Fed said something that was going to be very negative for the dollar. And essentially, when I looked at the prices, I liked it, and that's why I bought them, right? And I wouldn't have normally bought these puts, but this uptrend was so drastic that usually when you have such a drastic uptrend, like a hyperbolic uptrend, you're going to actually have, you know, you can have just as fast a sell-off. And that's exactly what happened today. And I'm thinking maybe it might continue and go lower, and I can try to make some more money. So right now, if UP goes to 25, 26, I'll make around $3,000. Let's say if it goes down to 25 bucks, I can make around 5,500, right? So so UUP turned out really good for me. The other one is HYG. This is the high yield bond. I talked about this one because essentially 13% of or 14% of this ETF is energy related, and as oil prices are going down, basically this index should go down, right? So I'm pretty happy with what happened, even though I lost money, because you see how this, when it as it's dropping, it has this reaction. So basically, I think what might happen is I'm going to wait until it tops out, and then I'm going to buy more put spreads, right? So I'm still bearish on HYG, but I'm going to wait until basically the dollar ends its downward trend or stabilizes, and oil prices starts going down again, because I think basically the dollar is going to keep going up, even though it sold off hard today. I think oil is going to keep going down, even though it rallied hard today. And I think HYG is going to actually fall because as more companies default, that's going to put the bonds at risk. Let's see. Yeah, I read this on CNBC. Let's see if I can find it. Yeah. So go ahead, go to CNBC and read this. Oil price drop sells trouble for bonds. Go ahead and read it. It's a pretty good article. You know, I like it because it supports my theory, but essentially you guys can read it and see what works for you guys, right? And I think like another oil company or energy company just went chapter 11. Don't know where I can find it, but I read it. So I'm going to buy some more puts or put spreads, but I need to have this go up and then kind of start rolling over. Okay. The next one is VOYA. I didn't have that good of a day in VOYA. I think it's a financial, and essentially the XLF was a laggard, just because if they don't raise interest rate, the yield curve is not going to be, it's going to stay it's going to stay flatter. And I think it doesn't bode well in terms of the banks and their revenue, but I'm okay with VOYA just because, you know, the fact that they're managing people's money, and it's been on this uptrend. So I'm going to stick with it, even though today it didn't have that great of a day, right? The other trade I did quite a bit today is XLU. So as soon as Janet Yellen and the Fed announced, I bought these calls. Yeah, so I bought them for 138, 141, and 155. And my thinking is that the utilities have been got crushed lately, but now that the interest rate might not go up anytime soon, because she's going to be data dependent, and I think as the dollar strengthens, it's going to make the growth a little more tepid, right? So I think we're going to still probably grow, but there's definitely more risk of that changing and turning around. So XLU, I bought some calls. I think, you know, it might do this, but I think it's headed higher. I was thinking of doing that or TLT, but TLT was already at the top of the range, so I kind of didn't do that one. So I stuck with XLU, see how I'll do. And then, of course, I have YHOO because I was bullish on Alibaba. And today's news is that Alibaba essentially unlocked 437 million shares. Doesn't seem like it really had too much effect. Maybe people were trading it ahead of time before the lockup, and even if people sold some today, it didn't really take any effect on Alibaba. In fact, because it didn't go down today, I think there might be a good chance that it might go up a little. That doesn't mean it's like done going down. I just feel like maybe in the next week or so it might get a pop. So that's it. Now, normally I would be buying a lot of, I was thinking of buying some calls right here, but it seemed like maybe the following day we might actually like open slightly down or flat. So I didn't want to take that risk, even though we could actually open up like 10, 15 points higher, right? So that is usually what I go for, but I didn't do that. One of the reasons I didn't do it, and I'll talk about this a little bit more on the other videos that I'm going to be doing, is so there's this group of traders called Trader Minute, and those guys like basically buy calls or puts. So what I do is I sometimes listen to them, and as I see trades are good, I piggyback those trades. It's kind of like same thing with what I do with order flow, but you know, I kind of look at what they're saying, and if I like it, I'll piggyback it. You know, mostly I haven't been doing it just because the main guy, Jeff, has been out. So I really haven't been doing too much, but he's back. So I'm, and I liked it. So I basically piggybacked the trade. So unfortunately, I can't tell you guys which one they are because it's a pay site. So you have to pay $600 per month. So it's not fair for me to divulge what trades he did. But you know, once in a while, right? I would say right now I'm doing like you know, 10% of the trades that they're doing. If they obviously become more successful, and if Jeff has a hot streak, I'll follow him more. But right now I'm kind of just you know, I haven't done too many trades that they have done in a very long time. But now that Jeff's back, I've did a little bit more. And I'll tell you guys how to get a month free from there in the upcoming videos. But that's about it. Essentially, nothing happened too much. I made most of my profit from trading intraday, and that's essentially just buying calls and puts after the announcement mostly. So you know, essentially I'm not doing that well still. We'll see. Like if you look at it, I'm down 15 for the month. In the past 3 months, I'm up 2. In the past 6 months, I'm up 34. So, you know, not that good if I have to go back. I'm going to try to turn this around, but we'll see how it goes. Other than that, hope you guys had good trading today. And I will talk to you guys tomorrow. Take care.